Aspiring Adult Profile Overview, Saving for a Secure Future. Please review these important presentation disclosure before we begin. Okay, for the aspiring adults, we have their savings preferences on the vertical here and their spending priorities on the horizontal. So who are these aspiring adults? Well, they're households that prefer saving using their earnings potential. They tend to be younger households that are wage earners or have their own businesses and stuff, but they're putting away money today for use tomorrow, and that's what we call future savings. Most of their spending right now is on essential living expenses, and of course this is all subject to their level of fundedness, the funding ratio. So what we say is aspiring adults are generally young professionals or are serious about saving for the future. Typical funding profile for these folks is going to look like this. The bulk of their assets is all tied up in the human capital, or basically the present value of all the future savings they're going to be doing from now till the point that they decide to stop working. On the spending side, you're going to see it tilt more toward the need side, where they're trying to make sure that they've got all their essential costs covered. So you can think about these folks as usually they're starting their careers, they're going along, they're starting to save through profit sharing and 401k plans and stuff, and they're very concerned about future costs. They're not quite sure, since these goals are so far out, how to save and what risks might be involved, and they're trying to figure out how to evaluate all this stuff. So the lifestyle funding risks they face all 5 of them, but the primary one is definitely earning risk, their ability to be able to save for the future. Then longevity, are we going to be able to save enough, not outlive our assets, and then inflation risk. So let's look at each 3 of these. So on the earnings risk side, the whole reason that you want to have a good job and the right skill sets and stuff is be able to save the excess beyond what you're spending in any given year to put away for the future. And this is a great example of, if you start with $100K an investment account, but you don't make any contributions, where is it going to be in 20 years? And we can see that it is still, if you have a modest return of 7.39, that's a geometric churn or an internal rate of return, you still wind up with this 416K, and then if you start distributions and you want to be able to take money from that account, a level amount, you can take 30K per year for about 30 years. Now, look at the difference if you're able to put away more money. Rather than 0 contributions, what if we start this one a little bit differently? We do 20K instead of 0, and look at the difference this makes. Instead of that, little over 400K, we have almost 3 times that at $1.2 million at the end of 20 years. So the 20 extra K makes a huge difference, and especially on the distribution side when you want to take it out. So instead of taking out 30K a year, we can take out almost 91K a year for that 30-year period. So again, the point here is, with earnings risk, you got to be able to have the right job to be able to save at whatever your earnings level is, and the more that you can put away now through contributions, the much better your portfolio is going to grow over time. Next is longevity risks, or what your living expenses are going to look like over time. And in this case, again, most of the aspiring adult folks tend to be young adults, young professionals. And so you're talking about a lot of variability down the road when you're trying to predict what the cost side is going to look like. But there's certain characteristics and curves and inflation that we know what a lot of these costs look like. And again, since they're concentrating on the essential costs, they're more interested in what we've got listed here, the essential, the medical, and the taxes. All of those are mandatory or essential expenditures that you have to do, but they're ones that we can control. When you break out medical and taxes, the rest of the essentials, food and shelter and transportation, generally follow kind of standard CPI, consumer price index inflation, which can vary between 2, 3, 4, 5%, but it's fairly predictable. The tough one is medical, because that tends to go up at year by year, the premiums and stuff at a rate that's a little bit faster than CPI, and then tends to have that big jump at the, toward the end of life, where you need to get into potentially assisted care or hospice care, or you have a medical condition and stuff that gets very expensive. And then taxes are interesting because if you're doing your job right, you should be able to manage those. And in this example, there's some little bumps and stuff where you had high tax years. With good tax planning, you can smooth those out and make sure there's no unnecessary taxes paid, especially at the end of life, and that's done through good estate planning. So longevity is an issue here for the aspiring adults, and let's look at the third one to focus on, and that has to do with inflation. And again, the reason for this is we're looking at a very long planning horizon here, especially if it's a young adults. So again, we know a bit about what the price curves are, but there's other things we can do in terms of plan and monitor and adjust our inflation rates to make sure that we're staying on track to be able to fund what these costs look like. So inflation is the third item. And again, for all these risks, earnings risks, longevity risks, inflation risks for the aspiring adults, we have an additional video for these folks who are subscribers to go into more detail on some of the risk mitigation strategies. Okay, so in summary, it is all about managing risk. We call it funding risk, because we want to find out if your spending is reasonable and based on your savings preferences. So is this all achievable? And we can measure that through your funded ratio and monitor that over time and make sure that you can live the lifestyle that you are seeking. Suggested next video tutorials. Here's a few. A lot of the quick definition videos are in the knowledge tab, but you'll find other videos and stuff sprinkled throughout the website. Here's our contact information, so please reach out if you have any questions.